Thanks for tuning in to this broadcast of the Resilient Advisor Podcast. My name is Jay Coulter, and joining me today is Chris Versace of Tematica Research. Chris is a regular guest on this show. We love to talk stocks. We love to talk earnings. And boy, we have a week for that today, don't we, Chris?
Yeah, we have quite a week for that. I think when all is said and done, we've got about maybe a little over a third of the S&P 500 reporting, which means that by the end of the week, Jay, half of the S&P 500 will have reported. You might say it's 250 companies, but we have a sea of somewhere like 800 reporting this week, and that's true. But what we garner from those 250, they will tell us how the March quarter earnings are shaping up for real and what the June quarter is starting to look like. And again, you and I talked about this, I think, last week and the weeks before. A lot of uncertainty in the market, and I think investors are going to be hanging on what these 250 companies have to say.
Well, Chris, I like to beg, borrow, and steal things from the internet. And today I ran across a slide that I think would really help.
Jay, before we get there, I just have a question for you. I notice you're usually a very stylish man, very well kempt, but you're starting to look a little bit like a hippie there. What's going on?
Well, Chris, the pandemic's starting to take its toll on my amazing coif.
But Jay, you live in Georgia. Georgia is open for business.
Georgia is open. I was able to get tattoos this weekend, go bowling, get my nails done, but I missed the haircut.
So did you have a chance to bowl a perfect game?
I did not, but if I wanted to, I would have had the chance. There's just something about sticking my fingers in bowling balls at this stage of the pandemic that didn't really seem to make sense. But Chris, if you'd like to come down to Atlanta and join me, I'd be happy to take you bowling.
I was contemplating that because my brother lives in Greenville, South Carolina, which is not so far from you. And he has mentioned the famed Atlanta Aquarium several times to me.
It is quite the aquarium, I'm not going to lie. Why we needed an aquarium that size in Atlanta, Georgia, I'm not sure, but it is a great attraction.
Don't ask why, just enjoy.
Yeah. Let's talk earnings. You ready?
I'm happy to derail you at any moment, but be my guest.
Longtime listeners know Chris likes to try to throw me off because I'm a very structured person, and he does a really, really good job of it.
Yeah, longtime listeners also know that Chris has had his own podcast, and from time to time, he feels like taking the mic away from Jay.
All right. I stole from the internet today, like I like to do. Here's a slide from this great company. In fact, I recommend following Earnings Whisperers. They put out some pretty cool graphics, and here's one they put out this morning that I thought was really applicable because the large amount of earnings coming out this week. And it walks you through the whole week, who's coming out before the bell and after the bell, or at least the most anticipated earnings. Chris, What do you see? Someone like you that lives on earnings, what do you see when you see a slide like this?
I see it's going to be a busy week, and there's a couple other things just to, sweeten the pot, as it were, Jay, or give the impression of the true full plate that we have. Not only do we have a sea of earnings that people really want to listen into to figure out, hey, what happened really at the end of the March quarter? What's the tone of the current quarter, and what are the prospects for a pickup in the back half of the year? So we'll talk all about that in a second. But Jay, we've also got a sea of economic data that's coming at us that's going to help inform us, just like earnings will. And we've got, I think, 3 central bank meetings this week, including our own Federal Reserve, which exits its latest monetary policy meeting on Wednesday. So that's going to be another big event that investors are going to want to clue into, not only to get a better sense of what did the Fed see during its meeting, but what is it really prepared to do, since it looks like we're now talking about a 4th pandemic economic aid package winding its way through Washington. This is only just a few days after the 3rd one was passed, I believe, Friday, Saturday.
Yeah. Well, so why don't we start with the economic data that you have your eye on for this week? And then we can dive into the stocks. Does that work?
Sure. It absolutely works. I'm going to cheat a little bit with my notes here because I want to make sure that we call everything out. So today, as we do this Monday, not a lot to look forward to. Tuesday, we have some housing data, April consumer confidence. There, we're going to want to watch and see what the drop is from March. That'll give us a real sense of what are consumers thinking, how are they anticipating spending, perhaps, given the pandemic. Remember, consumers, directly, indirectly, 2/3 of the domestic economy. So we're going to want to watch out for that. Wednesday, things start to heat up a little bit. Weekly mortgage applications index, fine. First quarter GDP. Now, we know the economy has fallen off a cliff in March. We've heard this from companies, from McDonald's to Starbucks to others that are out there. We've also seen that reflected in the data that we've gotten, particularly March retail sales, for example, but other manufacturing data and the like. So it's going to be a negative number, Jay. The question is, how big of a negative number, and is it worse than expected or less than feared? That's what we'll have to be watching
Chris,
for.
how relevant is it compared to what we're going to get 90 days from now, right?
Well, that's an excellent point. And I was talking with somebody about that earlier this morning. And I said, yeah, look, March quarter GDP, it's going to be bad. We know that. But it's really bad because of 1 month in the US. When we look at the current quarter, we're a couple days away from ending April. We're hearing talk about phased reopenings. But let's be honest, Jay, May, for the most part, is still going to be down year over year. Right, might be a little bit better than April, but still down year over year. That tells me that the June print, when we get it, early July, something like that, it's going to be a bad number as well, most likely worse than the March print. But here's the thing. I think by that point, if we start to see things open in terms of state-by-state economies in a phased approach, we hear a little more about progress in Europe as well. I think investors at that point might be just saying, you know what? 2Q GDP is what it is, rear view mirror. I'm focused on the back half of the year and what the start of 2021 really looks like, which I think you and I talked about this a couple of weeks ago. From my perspective, when we're talking about valuing stocks now, look, I understand people want to focus on what they're hearing during March quarter earnings. What's the outlook for the June quarter as well? To me, you really got to start to think about when businesses get back to normal. And that's really hinging on 2021. Granted, you need to make sure that these businesses can survive to 2021, which means you really have to understand their balance sheet dynamics, capital spending, dividends, will they, won't they pay them, and all of that.
Excellent.
So that brings us to Thursday. So on Thursday, this is one of my favorite data streams, personal income and spending. Again, ties in with the consumer. What's their ability to spend going forward? Also that day, we'll get the April PMI for China. And then on Friday, we get the April PMI data, hard data for both Japan and the US. And those are ones that we really want to look forward to. And along the way, we'll get some other data as well. But those are the key indicators. And when we get the April IHS market PMIs for the month, the final PMIs, as well as what you have up on the screen, the ISM manufacturing PMI for the US, what we'll want to look for is really a couple things. One, of course, what was the headline number? But we like to dig below the headline number to really figure out what's going on. So one of the subcategories that I always focus in on is orders. And we're going to want to see, how do those orders come in relative to March? My suspicion is that they're going to be down. Again, a question of degree. Right. Why do I like to look at orders? They tend to set the stage for the following month. So I think that when we get the May PMI data, what we see on the order flow will be critical to pointing to whether or not the U.S. economy, or if we look at the ones outside the U.S., are actually finding their footing and starting to rebound. That's going to be crucial.
All right. So through that lens, we now have this slew of earnings that are coming out. Tell me what's catching your eye at first, or actually, would you rather just walk through the week chronologically?
Best, because there's so many companies reporting in general, so many S&P 500 companies, and so many large bellwether companies reporting this week, Jay, that if it's okay, if you'll indulge me, let's just touch on a couple ones and really the high points that investors and your listeners should be really dialing into. What do we want to pay attention to? What can we hopefully learn? Yes?
Hit me.
Let's do it. So we're already on our way on Monday. So let's just bypass that altogether. And again, sorry, I just got notes here, so I want to make sure I hit them. Tuesday, Caterpillar, United Parcel Service, Alphabet, Starbucks, United Airlines, and Yum China. So let's deal with those. Caterpillar, look, heavy equipment, machinery. They will give us a sense of what the manufacturing and the construction economy are really doing. CAT tends to give forward-looking guidance. If they don't, that will be a signal of uncertainty remains. If they do give us guidance, we're going to want to match it up and see what they're thinking and what their assumptions are.
Hey, Chris, let me put you on the spot there. This is going to require a deep memory bank. 2008, 2009, was Caterpillar still giving guidance? Do you recall that data point?
I do not, to be very honest with you. I can't. That's 12 years ago, and
it was quite
I do remember quite a bit from back then, but point by point, company by company, no. I can't remember if the SEC actually relaxed their rules that allow companies not to give guidance, right? Or at least withdraw guidance, I should say. So I can't really remember. If I had to guess, I would say that they either didn't give guidance given the uncertainty, or they gave very wide guidance, the kind you can drive a tractor trailer through.
Useless.
Or as I like to call it, Amazon guidance, because that's what they do every time. So Caterpillar, then United Parcel, UPS, their comments on the rate of package delivery, particularly given the shift towards digital shopping that we've seen, will be huge and very confirming for a number of other companies reporting later this week and the weeks that follow. Remember, Target came out last week. I think this was after we spoke, Jay. They said that quarter to date, their same store sales were positive, in-store sales were down, which meant that the positive move for the quarter to date numbers was all on their digital shopping. And they said it was something like up 80% year over year. Chipotle said that their digital orders were up more than 80% year over year, grew to 26% of their overall business. So, this pandemic is really becoming a inflection point for digital shopping, not just during the holiday season, but almost all year around. I think it's going to continue, and I'm going to look for confirmation in what UPS has to say. So that's UPS. Alphabet, obviously, Google. One of the things we're going to want to pay attention to, we know that we are spending more time online, but what is happening to Google's advertising business? Remember, at the end of the day, we can talk all about search, we can talk about Android and all these other things. At the end of the day, Google bread and butter is an advertising revenue-based company. So we're going to want to see what the trends that they're seeing, what are they paying for click, and other acquisition costs, and perhaps hear some things and maybe what they think about for 5G given their hardware business. But there will be more 5G specific comments later.
And Chris, what are your expectations on the pay-per-click business? Do you think it's going down or going up since people are spending more time on it?
I think the rates that they'll be able to get here and now will be higher. The question is, how sustainable will that be once life hopefully gets back to normal? So, year over year, great, but the guidance may not be as robust just given what we've just talked about. We'll see. So that's Alphabet. Starbucks, they already pre-announced. The real question we want to hear is, when do they think that they will start to open their locations? Remember, a lot of restaurants have shifted really towards either drive-through or curbside pickup. When are we going to see them open? We've heard some rumblings from McDonald's. We've heard some comments out of private company Chick-fil-A that they're going to take their time and do it right. But Starbucks is massive. We also want to hear from Starbucks, what are they seeing in China? Because China is already past the tipping point. I believe they've said that they've now recorded at least a few days with no new coronavirus cases. What's the feeling there? What's the outlook there? And can we equate that to what we'll see in the US and Europe, but on a lag basis? And then,
so Chris, as it relates to Starbucks, it's sure. I've always felt that the overpriced coffee at Starbucks, while delicious, was part of an experience, and that experience was going into the store, probably a business meeting or meeting with friends. And if I was going to go drive through and pay $1 for a cup from McDonald's or $4 from Starbucks, it seems to me there would be some challenges. And if they can't get together inside the restaurants, then it seems like they're going to have a hard time recovering in a timely fashion, yet their stock's only down 11% year to date. How do you reconcile those?
A couple things. I have to beg to differ on the difference. I do like my coffee. I'm a little bit of a snob in that regard. I apologize. I am not a frappuccino, mochaccino, whatever it is. I try to keep the calorie count low in my caffeinated beverages, not, effectively meal replacement. But, hey, that's me. I think that they have done a very good job delivering where they can, and that's the key. Unlike other restaurants that don't have drive-through, haven't really embraced mobile ordering or even mobile delivery, because remember, through Starbucks, you can get your coffee delivered through Uber Eats, DoorDash, and some of these other services. And that's really been the difference for a lot of these companies. So take, for example, Domino's Pizza. They actually had positive comps, in their last quarter. Why? Pizza delivery. That's their business, right? I have never been able to sit down inside a Domino's. I don't know if you can down in Georgia, but there is no place to sit.
Mm-mm.
No place to sit. So I think that's one of the key differences. And again, that harkens back to my comments on Chipotle and several others, that they've seen, better than expected, or, better than feared results.
Okay. Gotcha.
And then the last one that day really is going to be United Airlines, which, look, we all know what's happening. The load rates are extremely, extremely low. We've seen capacity cuts. I believe United announced that they were cutting their capacity 90% in May and perhaps in June. Other airlines have come out. So a couple things here. One, what are they doing to manage their expenses? Are they parking planes? When do they see the rebound? But also, too, what's the silver lining here with oil prices? Because that's a huge, huge indicator of jet fuel prices. So perhaps, I think as we're talking, Jay, I think oil is down yet again today, below $20 a barrel. So, perhaps that's giving them some incremental cushion that might help them out. But I'm really curious to hear with how they plan to rebound their business. And this goes for all the airlines. There's some talk about in a 3x3 across, taking out the middle seat and doing some other things. If they do that, how long does that take? How long do they think it'll last? What does it mean to ticket prices? Because you're really shrinking your capacity per plane.
Mm-hmm.
I mean, there's a lot of dynamics here, and all this comes out of some comments from the JetBlue CEO last week. Southwest Airlines, who said that if things don't change, there's going to be fewer airlines around.
Well, Ryanair, didn't they come out and say they'll close if they have to take out their middle seat?
I didn't hear that specific comment, but that does make sense. I mean, we can talk all about consolidation in the airline industry and what it means. Remember that there are certain gating, no pun intended, but gate factors when it comes to planes. So, or airlines and the ability to fly from one location to the next. So I suspect that, the airline industry in the next, 12 to 18 months is going to look very different than what it did over the last 18